consideration for non-resident Indians. Non-resident Indians (NRIs) face unique tax considerations when dealing with income earned both in India and abroad. The tax implications for NRIs are primarily determined by their residential status under the income tax of India, which affects their tax liability in the country. Here are some key points NRIs should consider. Residential status. The first step is to determine the residential status each financial year as per the Incometaxact. The status primarily depends on the number of days of stay in India. Resident. An individual becomes resident if one of the following two conditions mentioned below are satisfied. Stay in India is for 182 days or more in a year. Stay in India is 365 days or more for the immediately for preceding years and is 60 days or more in the relevant financial year. Resident but non-ordinary resident RNOR. Once the individual qualifies to be a resident, it needs to be checked whether the criteria for RNOR are satisfied. An individual qualifies to be resident, ordinary resident ROR if both the following conditions are satisfied. The individual qualifies to be a resident of India in at least 2 out of the 10 years in the immediately preceding years, and the individual has stayed in India for at least 730 days in the 7 immediately preceding years. If any of the above conditions are not satisfied, the individual qualifies to be an RNOR. Non-resident NR. If the individual doesn't meet the above condition, he or she shall qualify to be a non-resident. Residents are liable to tax on income earned in India and outside India. In certain cases, income earned outside India may not be taxed depending on the applicable tax treaty. The RNOR and NR are liable to pay taxes on the income earned in India. The applicable provision of tax treaty needs to be checked in case of double taxation. Taxable income in India. As a non-resident Indian or NRI, generally individuals are taxed only on the income that is earned or accrued in India, depending on the tax residency in India. This includes income from salary if services are rendered in India, income from property or asset in India, capital gain on the transfer of Indian asset, income from fixed deposit or interest on saving bank accounts. Double Tax Avoidance Agreements DTAAs. India has DTAAs with several countries to avoid double taxation of income earned in India. If the individual resides in a country that has DTAA with India, then certain tax relief or benefit could be available under the tax treaty. Deductions and exemptions. NRIs are eligible for various deductions under Section 80C, such as life insurance premium, investment in certain scheme. However, there are some restrictions on certain investment vehicle compared to resident Indians. Bank account. NRIs can maintain different types of bank account in India, such as non-resident external NRE, non-resident ordinary NRO, and foreign currency non-resident FCNR accounts. The interest earned on NRE and FCNR account is tax-free, while the interest on NRO account is subject to tax deducted at source TDS. Property and capital gains. Income from property rental is taxable for NRIs. Also, selling property in India involves capital gain taxes, although individual can avail exemption under certain conditions, such as investing in another property or specific bonds. TDS. Income earned by NRIs is subject to TDS. The rates may be higher for NRIs, and it's applied to earnings like interest from fixed deposit, property rent. Tax filing. NRIs need to file an income tax return in India if their income exceeds the basic exemption limit, or to claim a refund or carry forward a loss. Being aware of the due dates and the procedures for filing return is important to comply with the applicable tax regulations. Wealth tax. Wealth tax is no longer levied in India. Estate planning and inheritance. Inheritance is not taxed in India, but the income from inherited assets like interest, rent, etc. is taxable. However, it is advisable to check the tax implication in the country of residence too. Since tax laws are subject to change and can be complex, it's advisable for NRIs to consult with a tax advisor who is well versed with the Indian tax law and the tax treaty provision between India and the country of residence. Thank you all for watching.